The first month of 2023 is in the books, and we did it, guys! All 3 investing strategies have made a profit. In the last episode, I was wishing for a fresh start in 2023 after 2022 was one of the worst investing years in the last 80 years, and I got what I wanted. Let's see what happened to our investing portfolios in January. But first, I want to use the chance to teach you something mind-boggling about inflation. And if the president of our European Central Bank, Christine Lagarde, is listening so closely, you should too. I don't want to talk about what inflation is. It's the increase of prices. We all know that by now. I want to talk about the one key sentence of the ECB press conference yesterday that everybody seemed to overheard. For whichever reason that is beyond me. In case you missed it, or you're simply not interested in economics, Christine Lagarde raised our key interest rate in the euro area yesterday from 2% to 2.5%, and she plans to increase interest rates to 3% in March. We'll see what happens. Anyway, yesterday she said this: inflation will definitely return to our 2% target. There should be no doubt. Can we stop for a moment and think about the sentence? Can we use our brains here, please? Of course inflation will come down at some point. It's already down to only 8.5% in January. And that's why they are proudly publishing charts like this. And in a couple of months, let me predict this right here. The media will be full of good news telling us that everything is alright again when inflation is back at 2%. But think about it with me for a moment. How is inflation actually calculated? You take the prices from February last year, let's say €1, and compare it with prices of February this year, let's say €2 to have 100% inflation. Look at my black inflation chart. Pretty bad, right? Well, not if you're Christine Lagarde. Because in February next year, you compare prices with February this year, and if prices increased from €2 to €2.04, you have your 2% inflation target, and the chart looks like this. And that's when they will tell us that everything is okay again. Hopefully you can see where I'm going with this. The chart looks like nothing happened, but we have 51% inflation in my little example. So Ms. Lagarde is absolutely right, inflation will come down again, but that does not mean that prices will come down. That's what everybody seems to mistaken. Prices can continue to increase and inflation will still come down. Thank you for listening to my little rant. Hope you learned something while my blood pressure was going higher than the inflation rate. After minus 2.1% in December in the last month's episode, we are at plus 3.4% in January in the high safety investing strategy, which makes me personally very happy to finally have 3 green charts again in all 3 different investing strategies. Now we just gotta get the entire portfolio since the start in August 2021 into the winning column. It's a tough task, to be honest, because this is the investing strategy with about 70% in bonds, and with the current interest rate changes, it's an interesting time for bonds. But that's what we have to do in order to keep the risk classification for you guys. At least you got a little dividend in the first 2 days of February already, which is nice. Our passive income investing strategy is up the most in January, which will also make the most of you very happy because the most of you are invested in this strategy. We are up 3.85% after being down less than 0.8% in December. So good growth, as you can see on the right. And we will hopefully break even here soonish. We are almost break even if you factor in the dividends we've gotten over the last years, but I want dividends and capital gains for you guys. Speaking about dividends, January was an empty month because the way the underlying ETFs pay out dividends every 3 months, there's no dividend. So if we don't make any changes in the upcoming weeks, February and March will pay again, and April will be 0 dividends again. And then it continues. And our high return investing strategy is coming to life again as well after being down the most last year. Here we will have one factor basically making or breaking this investing strategy. the recovery of the tech sector. It's going slowly but steadily with plus 2.9% in January, but hopefully tech will recover more as we progress more through the year. At least we got a little dividend in January while we are waiting. And that's what investing is sometimes. Waiting. Nobody of us can force the stock market to go up quickly. And timing the market by switching back and forth, buying and selling all the time is certainly not a solution either. We have the empirical data about that already. If you want to join us on the ride up, which hopefully continues, you can open your free investment account with Fidelity online with a link in the description. Takes just a couple of minutes. After that, please don't forget there's a second thing you need to do. Do the post ident or video ident, which should work completely online, which no matter passport you have. Except US, of course. If there's any questions or you're stuck in the progress, let us know and we'll help you out. And then it's the waiting game for you, about 2-3 days when Fidelity opened your account, and then we will reach out to you, and we'll set up a meeting to discuss the right investing strategy for you. Let's all cross our fingers that the recovery continues, and I'll see you next month, investors.